Here the candlesticks are the basic block of technical analysis. For clarification, the charts are included in the video. There are basically two types of candles. One is bullish candle and other is bearish. The bullish candle is one whose close is above the open price, and the difference between the close and the high is known as the upper wick, and the open and the low is known as the lower wick. The second one is bearish candle whose closing price is lower than the opening price. The difference between the high and the open is called the upper wick, and the close and the low is known as the lower wick. Here I want to state that the chart of the stock is actually the dramatically representation by these candles, which makes us easier to know where the buyers and the sellers are more dominant. The market always remains between one among the two states, whether the trending or the trading. Here the trending means where the more and more buyers are coming, and the each candle appearing forms higher high. The state where the candles which appears as a higher high is known as the uptrend, and the trend where the candles forms lower low and lower high is known as the downtrend. Both are actually a trending market. The trending means either the market moves to the upward or to the downward, whereas the trading range is the state where there is not very clear whether the buyer or the sellers are the dominant, means in a confusion state, means neither buyer are coming to show that they are interested in buying, and neither nor the sellers are coming to sell the stock. Yes, step by step we are going to discuss all the important patterns which are formed with the combination of both the candles. The buyer or seller dominant candles are the candles which does not have upper or lower wick. It represents that the buyer or the sellers are in hurry to buy or sell, whereas the dozy represents the indecision, showing neither the buyer nor the sellers are interested. Means that doji shows that the market is not trending. Actually, they are in trading range, so it is better to avoid trading in doji days or in trading ranges. Here I clearly state that the in trending days all the lagging indicators or candlesticks, all patterns will work, whereas in trading ranges all the profit you will earn in trending days, means you profit earned in the market where the buyers or the sellers are dominant will ruin. So keep avoiding trading until unless you got perfection. Yeah, there is also a technique to trade in the trading range days. This means um, like price action, or still there are some indicators, but one should have to be conscious. The buyer dominant candle is the candle which does not have upper or lower wick. In my upcoming video, I will discuss what should be the entry point, stop loss, target, what are the trend lines, what are channels, what are lagging indicators, leading indicators, and their nature. So keep watching and subscribe for more updates. Single reversion pattern or the single day reversion patterns are the one and the same thing as their the name suggests. These are consists of only single candle. We only need the confirmation on the next candle before taking our entry position. Okay? So there are two patterns according to the book of Clive Lumber, which are the hammer and the inverted hammer for bullish reversals. Here bullish reversal means from the market moving to the downward, and suddenly the hammer or the inverted hammer appears, and after confirmation the downtrend converts into the uptrend and the market moves into higher and higher. Hammer is basically a bullish reversal pattern with small real body having negligible no upper wick and the long lower wick, which should have the length of more than twice the real body. Uh, Here in the chart, after this slide, look at the behavior of the hammer and the the one and the four and the one and the foremost thing is the hammer should be appeared in the downtrend only works. Means that suppose you are moving up higher and higher, again the hammer appears and you place entry on that, um, did not work. So the hammer should be formed in the downtrend, which is a prerequisite, and after the hammer get formed, before making entry, one should wait for its confirmation on the next candle. I am saying again and again, whatever be the candle pattern, whether it is a single day or the multiple day, the confirmation is must on the next candle. Yeah, the confirmation means suppose that the hammer appears, and this is a bullish, and all the things are working, that the market moves in the moving is the downtrend. Suddenly the hammer appears after hammer. If there is a confirmation, this shows that still there are buyers present in the market which wants to buy. So you take the position. Otherwise, the chances of failure are more. Inverted hammer, as I said, that least important, as comparison to the hammer. Still we discuss that the same, the properties are same. Here the in hammer we discuss about the lower wick, but in inverted hammer the lower wick is not present. There is a negligible or no lower wick, but still there is the long upper wick, which should be at least twice the height, twice the body of the inverted hammer. Again the market should be in downtrend, still needs confirmation, but here it is again subjective. Sometimes inverted hammer works, sometimes inverted hammer does not work. Here shooting star and the hangman are the bearish reversal pattern, but here I want to clear that only the hammer and the shooting star is important in bullish and bearish reversal, the bullish and bearish reversal pattern, though we discuss all the four candles. It is very much subjective while we're talking about the candlestick patterns. Sometimes the patterns work in a market, and sometimes it doesn't work. I'm saying I could not say that the hammer and the inverted hammers only the hammer will work. Sometimes inverted hammer works, sometimes inverted hammer does not work. But the probability of working hammer is more, so that's why I told that the shooting star and the hammer is the much reliable pattern while we trade. The theory is the market opens and the buyer dominant, due to which the price goes up but did not able to sustain it, and due to selling pressure the price comes back to its original price and closes. There is either nil or very negligible difference between the opening and the closing price of the stock. It is a bearish reversal pattern with no real body and long upper shadow, and the market context should be upward. Dragonfly looks like a bar below which the vertical line is there. The theory is the market opens and the seller dominant, due to which the price drops and the buyer came and pulled back the price. There is very negligible difference between the opening or the closing price, or it may be the same. A bullish reversal pattern with no It is a bullish reversal pattern with no real body, a long lower shadow, and the market should be in downtrend. The rickshaw dozy looks like a plus sign. Seems that the forces go out of the castle, fight, and then comes back to the castle again. Here the buyer pulls up the price, whereas the seller pushes down. Neither got succeeded and closes at or just around the opening price. It is a dozy with no real body and a long upper and lower shadow. Multiple reversal pattern compose of more than one candle, more reliable to trade, still need confirmation before trading. The bullish reversal patterns are bullish engulfing, passing pattern, bullish harami, and morning star. The bearish reversal patterns are bearish engulfing, dark cloud cover, bearish harami, and evening star. Bullish engulfing is basically a two candle bullish reversal pattern. First candle is a bear candle while the second candle is a bull candle which completely engulfs the previous candle. The overall context of market should be downtrend, that is the market should be in the downward movement. The confirmation before entry should be must, which shows that there is still buyer present. The piercing pattern is a two candle bullish reversal pattern. First candle is having a bear body in the downtrend movement of the market, then the second candle appears with a lower gap and forms a bull candle which closes at least half of the first candle. There should be the confirmation before you are going to take the position. Bullish Harami, a two candle bullish reversal pattern where the first candle is having a bear body in the downward movement of the market, whereas the second candle should have small bull body contained within the real body of the previous candle pattern. It just looks like a pregnant lady. The confirmation is required before entry. Morning star is a three candle bullish reversal pattern. The overall market context should be the downtrend. In this downward movement, the bear body appears, the second candle gaps open lower and more reliable. If forms bull body, it may be a dozy, whereas the third candle should have bull body which closes at about 60% of the first candle which was having bear body. Though a three candle reversal pattern still need confirmation, the confirmation is needed to reduce the odds of being wrong in the market. One among the most reliable pattern to trade. Bearish engulfing, the two candle bearish reversal pattern with first candle is a bull bar and the second one is the bear candle which completely engulfs the first candle. The market should be in upward movement, that is the overall trend should be uptrend and the confirmation should be required. Dark cloud cover is a two candle reversal pattern. Prerequisite is the trend should be upward or should be uptrend. First candle is a bull candle or the candle having bull body. Second candle gaps open higher, that is above the close of first candle, and should be a bear body and closes at least half of the first candle. Here I am again emphasizing that the confirmation is must. Bearish Rami is a two candle bearish reversal pattern where the first candle is having a bull body in upward market movement. Second candle should have bear body that is contained within the first candle, just like a pregnant lady. Bearish Rami is just like a bullish Rami. The difference lies between the context of market and the color of candle. The bull candle becomes bear and the bear candle becomes bull. Here the confirmation is required prior taking trade. Evening star is a three candle bearish reversal pattern. The market should be in upward movement where the first candle is a bull candle, the second candle gaps open up having small real body. It may be a doji. The third candle should be a bear candle and closes above 60% of the first candle, which was bull candle. One among the most reliable pattern to trade, confirmation prior taking trade is must. Hey, stay tuned for shortcomings on candlesticks. There is not any technique which is fully applicable in all the markets. Some got applied in trending while other in trading ranges. Please subscribe for more videos. Our upcomings are how to take trade, what should be the entry point, stop loss and target. What are leading indicators? What is demat account, trading account, how to take live trade and many more. What are resistance zone, what is support zone, what is trend line, how we can use it, what is price action and many more. And please do not forget to like the video. Though candlestick is 300-year-old well tested techniques still have some shortcomings. They need confirmation before taking trade. Candlestick work well, but there are some areas where candlesticks does not give desired result, like in resistance zone. If you take trade on morning star or hammer, it fails. And obviously, in trading market, candlesticks fails. And thanks for watching the video.